Hey everyone, welcome back to the channel. Today's a big day and I want to talk about how today's Federal Reserve meeting is going to affect two of my main stock positions, Nike and SoFi. There's a lot riding on this meeting for both the economy and the stock market. So let's dive into why today's outcome matters for these stocks and my investment strategy overall. We'll also touch on some major news coming out of Amazon, and what the current high federal funds rate could mean for the economy if it stays elevated in the long term. So let's get into it. First off, let's talk about the Federal Reserve meeting and how it could impact my positions in Nike and SoFi. The market is anxiously waiting to see if the Fed will cut interest rates, and most investors are expecting a 0.25 cut today. Now, personally, I think we will see a sell-off if the cut is 0.25 or even less than 0.75. Why? Because I believe the market has already priced this smaller rate cut already. I feel that we're at a point where if we look at the last couple of days, every investor has lately been expecting a 0.5 cut, and it's already priced. Most people have priced in a half a percentage cut. That even though that would be what I think the Fed should do based on the current interest rates, that's not something that we're going to get, because just because we want a cut to be that much doesn't mean we're going to get a cut to be that much. So if you look at recent price action, the market seems to be positioning for a more aggressive rate cut. If we look at even today, as we're on September 17th, we can see that the market has been up 3% over the last 5 days. It's currently at a new all-time high. I'm positive that I'm looking at a new all-time high right now. It's 564 in the pre-market. So looking at the recent price action, this seems like we're already pricing in this cut. So if we only get that quarter percentage cut, we can see a lot of investors taking their profits and running. For Nike, which is a consumer discretionary stock, higher rates means less disposable income for consumers, which directly will be impacting their sales in the long term. Now, when it comes to SoFi, it's a bit different because SoFi operates in the fintech space. They've been heavily affected by rising rates. A rate cut, even at 0.25, could actually help them, because it would lower their borrowing costs and make it easier for them to expand lending services to their customer base. But again, if the cut seen as too small, we might see a short-term sell-off before the market settles. So now let's talk about the Amazon recent decision to mandate employees to return to the office. Amazon, which is one of the biggest companies in the world, is telling workers to come back. This is huge for commercial real estate sector and other businesses that depend on in-office workers. Companies like Nike that operate in physical retail spaces or even rely on foot traffic could benefit as even more workers return to the city. However, employees returning back to work has been a trend that companies are seeing a lot. The statement from the CEO states that they want to behave like a startup, just like they were again when they first started. They don't want to be doing that more leisure type of working style anymore. They want to be able to get their employees back to work and do the best work, which I understand. However, I can also understand from the employee perspective how this could be a little bit more nuanced than helpful for them. Now you have to get back to traffic, and now you have to deal with the office workers that just keep stalking. Now you have to essentially focus on more distractions. So this could be what I would say a less effective decision than letting employees work remote, where they could actually be more useful. So I think that this decision is probably not a good one for the future. I think that this is something that companies are trying to do again with a lot of their employees, because they went mostly or partially remote during COVID, and now they're trying to get their employees back. But this makes you also think, what about smaller companies? Could this pressure smaller businesses following in suit? What does this mean for the growing remote work economy? It's definitely a trend to keep an eye on, especially if other large corporations start adopting similar policies. Lastly, let's talk about the Federal Reserve effective rate and why it's important. Right now, at a historic high level, and that has some serious long-term implications. If the Fed keeps rates high for an extended period, it could slow down economic growth. We're already seeing this in the housing markets, where mortgage rates are making home less affordable for most people. It's not just housing. Companies like SoFi, which depend on lending, will see fewer people take out loans. If the Fed stays hawkish, we could see a lower consumer spending, which could hurt companies like Nike. People simply won't have extra cash to splurge on new sneakers or new apparel. That could affect earnings. So to wrap this up, today's Federal Reserve meeting could have a big impact on both my Nike and SoFi positions. If we get that small 0.25 cut, I'm bracing for some short-term volatility, especially if the market was expecting more, which seems like it is. And with Amazon pushing employees back to the office, the Federal Reserve rates staying high, the next few months could bring in some major shifts in the economy. So what do you guys think? Will the Fed go for a larger cut? Are we in for a sell-off? Drop a comment below. Let me know your thoughts. Don't forget to like and subscribe if you want to follow my investing journey. See you in the next one.